Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's get more here on some of the movers today. I'm Alex Steele with Paul Sweeney. We're joined by Bloomberg's Christine Aquino. Let's start with Warner Brothers and this split off.
It's a bit of a breakup story, as Paul Sweeney mentioned earlier. So Warner Brothers, ticker WBD, shares are up just over 9%. So appearing some of those opening gains on the back of this split news. So basically the plan is to split its streaming and studios businesses and its TV networks operations by the middle of next year. So now the streaming and studios company will include Warner Brothers, Television, the Motion Picture Group, DC Studios, HBO and HBO Max, and then the Global Networks company will include entertainment, sports, and news television brands, including CNN. So this is meant to capitalize on consumers shifting away from traditional pay TV to new online options, and hopefully the new structure will cater to that.
So Paul, do we like this?
Yeah, it's Comcast has announced something similar. So this is just the bankers taking apart what they put together just a few years ago and getting paid both times. Basically, it's a situation where you take the good businesses, the studio, the streamers, and you separate that from the less good businesses, which are the cable networks, which are flat to declining. But they have good cash flows.
And okay, so
and that's where a lot of the debt will reside.
So what do? You didn't just roll off the quote unquote less good business?
Like you just split them up.
It's just a cash cow paying off debt, period.
Yep, exactly. And maybe that business will merge with the Comcast cable networks that are going to get spun off, and then maybe so a bigger, badder company.
Two less bad combined make something different.
But the bankers get paid.
But the bankers
JP Morgan and Evercore.
It's important.
JP Morgan
it's
and
important
Evercore.
for Paul. All right, let's go to Qualcomm.
Qualcomm, that's another M&A-ish type of story. So ticker QCOM, that's currently up more than 3% at the moment. And so this is because Qualcomm reached an agreement to buy Alphawave for more than $2 billion, $2.4 billion to be exact. And the offer equates to about 183 pence per share for Alphawave. So that's a 96% premium to the share price on the 31st of March, which was the last trading day before they disclosed the talks. And so, the CEO of Qualcomm, Cristiano Amon, has been looking for ways to lessen the company's reliance on the smartphone market. And supposedly Alphawave, given that its tech can be used for data centers and AI applications, can be used for that. But then some analysts from Loop Capital call the move a bit of a head scratcher, quote unquote. Although they did also say that it's a low risk deal for Qualcomm shareholders, given the relative sizes.
All right. A little M&A trade, not bad. Starbucks, yeah, ticker SBUX. So that was down pre-market, actually, but recovering a little bit now, just up 0.4% at the moment. And so that comes after Starbucks announced price cuts for its tea-based beverages. Not here, though, in China. Paul, okay.
Sorry.
All right.
But that's part of their latest campaign to appeal to Chinese consumers. The summer's coming up. They're also facing increasing competition from local chains that are more tea-based. So Starbucks now trying to compete with that market. A bit of a departure because before, they were arguing that they have a premium position in China, but I guess now they're wanting to compete.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.